A bank is a safe place to keep your money. You can also access tools to help you manage your money. These tools include debit cards, credit cards, and checks. Banks offer savings and checking accounts. They also give out loans. Banks are businesses. They need to make money to stay open. They charge fees for some of their services. Banks are regulated by the government. This is important because it helps keep your money safe. The government also wants to protect people from unfair banking practices. There are many different types of banks. Some banks are small and local. Other banks are large and international. No matter the size, banks play a vital role in our economy. Did you know that the first credit card was invented in 1950? It was called the Diners Club card. People used it to pay for meals at restaurants. The largest bank in the world is in China. It's called the Industrial and Commercial Bank of China. The oldest bank in the world is Banca Monte dei Paschi di Siena. It was founded in 1472 in Italy and is still in operation today. The $100 bill is the largest bill printed in the United States today. But did you know that the United States once printed a $100,000 bill? Only 42,000 of these bills were printed. Banks are important for a few reasons. They help people save money. Banks keep your money safe. They also make it easy to pay bills and buy things. Without banks, businesses would have a hard time operating. They would need a safe place to keep their money. It would also be hard to get loans. Banks provide loans to businesses of all sizes. Banks create jobs and help the economy grow. They provide essential financial services. They also play an important role in the global economy. Next time you go to the bank, remember you are part of a system that has been around for centuries. Section 4. How do banks make money? Banks make money in a few different ways. One way is through interest on loans. When banks lend money, they charge interest. Interest is a percentage of the loan amount that the borrower pays back to the bank. Banks offer many different types of loans. Some loans are small, such as personal loans. Other loans are much larger, like mortgages, which are used to purchase a home. Another way banks make money is by charging fees. Banks charge fees for a variety of services. These might include monthly maintenance fees on checking accounts, overdraft fees, or fees for using an ATM that is not affiliated with your bank. Banks also make money by investing your money. Section 5. A look back at banking. Banking has been around for thousands of years. In ancient Mesopotamia, temples acted as banks. This is because people trusted the priests to keep their valuables safe. The first modern banks were established in Italy in the 14th century. These banks were different than the banks we use today. The Bank of England was established in 1694. It was the first central bank in the world. Central banks are different from commercial banks because they manage a country's money supply. The Federal Reserve is the central bank of the United States. Throughout history, banks have played a vital role in the development of economies around the world. Section 6. In conclusion, banks matter. Banks play a crucial role in our lives. They provide a safe and convenient place to keep our money. They also provide a variety of financial services, including loans, checking accounts, and credit cards. Banks are essential for economic growth. They provide capital for businesses and create jobs. Banks also facilitate trade and investment. While banks sometimes get a bad reputation, it is important to remember that banks are businesses. They need to make money to stay in business, and just like any other business, there can be bad actors. However, banks are highly regulated by the government. This helps to protect consumers and ensure the stability of the banking system. Understanding how banks work is essential for managing your finances. By learning about the different services that banks offer, you can make informed decisions about your money.